Well, I've never been introduced that way before. I'm not sure I can solve all of your problems, but when I was asked to come speak to you guys today, one of the things I was thinking about was what's actually the value for me as a lawyer? You guys are not lawyers. Some of you might be, you're mostly business people. What can I say that actually makes a difference to you, particularly if you're folks who work in early stage companies? So I'll tell you a little bit about my practice. I represent mostly institutional players. I represent very large banks. I represent institutional FinTechs. I don't, for the most part, represent people who are in your position, which is people in kind of an early stage of your company's life. So when I was putting this together, I thought perhaps the most useful thing I could kind of talk to you about is from the perspective of the people who are listening to you when you're coming to talk about selling your company, partnering with a big player, competing with a big player. What do they think about? What are they hearing when you walk in the door? Because those are the people that I talk to and the people that I represent for the most part. So as you may or may not know, Americans are highly both litigious and risk adverse. So I am required to first tell you that I'm not giving you legal advice. I'm not your lawyer, and if you need legal advice, you should go find a lawyer who's yours, because it's not me. That duty done, let's move on. I'm going to talk a little bit about FinTech in the US in 2018 very quickly. It was a weird year. I think of it as kind of a 2 steps forward, 1 step back year for a lot of parts of the FinTech sector. ICO market was very, very cool, very slow. So 2017, everyone and their mother called and wanted to do an ICO for all manner of things. A lot of people called and wanted to do ICOs who I'm not sure actually knew what an ICO was, but they were hoping that they could raise a lot of money doing it for all sorts of projects, ranging from digging big holes in mountains to, as I was telling someone recently, trying to persuade the government of a small Caribbean country to put their entire currency on the blockchain. 2018 was cool. Not a lot of activity. That's due to strong regulatory action by the US Securities and Exchange Commission that really calmed a lot of things down. The other thing we saw in 18 was institutional players really moving into spaces that historically had been spaces for early stage and startup companies. So you guys in Hong Kong are very advanced when it comes to certain types of payments that we don't do in the US. Paying for things with your phone is not common for us. Instant payments are hard for us. Those were spaces that were startup company spaces in the United States historically. They are spaces that banks moved into in a big way in the past year to 18 months. We saw a lot of that in 18 as well. Very limited interest in traditional cryptocurrency applications. So not a lot of desire to give money to or do deals with people who just have a new coin. If sort of the argument was, I've got a new coin, it's going to kill Visa and MasterCard, well, Visa and MasterCard have 9 million merchants in the US, they have 40 million merchants worldwide. No one's really interested in 18 in talking to somebody about cryptocurrency that's just cryptocurrency. So coming to 19, is some of that changing? Yes, I think it is. So the US Securities and Exchange Commission, I think, is taking us, or an evolving posture towards ICOs and crypto in general. There is renewed interest in crypto, but not, again, in just sort of, we're going to kill credit cards. And I'll talk a little bit about that. And the last thing we're starting to see is a much more mature discussion about blockchain in the United States. In 17 and 18, a lot of people called who sort of said, this is my company, it does something very traditional on the blockchain. I'm going to do this, we're going to put this on the blockchain. Who didn't even necessarily know what that was, but again, they had heard this is a word, if I say this word, people are going to give me money, right? That's really changed. I think we're going to see a lot of change in that space in 2019. All right, so let's talk about the Securities and Exchange Commission a little bit. A lot of people view the US SEC, which is kind of the equivalent of the SFC here, although it doesn't cover all of the same regulatory areas. That's sort of the ICO killer in the last 18 months in the US. I think a lot of people who were paying attention knew that that was coming. but the SEC pretty aggressively demonstrated in 2017, 2018 that it was going to view most ICOs as offerings of securities in the United States, and that meant you needed to comply with US securities laws, which meant a registration or an exemption. A lot of people were doing ICOs because they didn't want to comply with US securities laws. So that was inherently a problem for a lot of people. We're seeing some evolution in that, which is a good thing if you're interested in doing an ICO in the US. A couple of things I would say. First of all, I think a lot of people thought the SEC just hates crypto. Don't go to the SEC and say you want to do an ICO. They will think you're a fraudster. They'll try to put you in jail. What we're actually seeing now is a little bit of a shift. If you are interested in complying with securities laws, if you're interested in registering, if they don't think you're committing fraud, they are more willing to talk to you and maybe say you need to register, but it's not quite this sort of death to all ICOs thing that we thought was going on. A fairly recent development is also they are launching a sort of regulatory sandbox that will create an avenue. Now, as you may or may not know, the US government is shut down right now, so these people are probably not working, but theoretically will create an avenue for people who are interested in doing an offering in the US to communicate directly with regulators in a more immediate way and confer with them, get advice, get compliance suggestions to increase the odds that if you do an offering, you're going in the right direction with your registration or relying on the right exemptions or figuring out if this is even applicable to you at all, right? So that's a positive. And I think we will start to see people who are capable of qualifying to do a regulated offering or to qualify for an exemption, people who have an actual reason to be doing an ICO, that will start happening again. So the other thing we've been seeing a lot of, and so I have the great good fortune of talking to you twice, so I hope you like this because you're getting more of it. I'm going to speak with a couple of my colleagues and shortly after this about what we sort of see going on with cryptocurrency. A really interesting thing we're seeing a lot of now is a rebirth of interest in crypto that does more complicated things. Systems that are not just a token you're going to buy stuff with. Use of crypto for loyalty, self-sovereign identity, digital identity management. Seen some really interesting activity around trying to kind of disrupt traditional web advertising through use of cryptocurrency, some more complex systems. Everyone's talking about stablecoins. I'm sure you're all talking about stablecoins too. So a lot of that as well. We're seeing a lot of B2B activity also. So people think of that as way less sexy, right? No one's like, what's really cool is this platform that's going to help my customer buy light bulbs from overseas more efficiently. But you know what? There's a lot of money to be made in buying light bulbs from overseas more efficiently. And we've seen a couple of platforms launched that sort of use blockchain to remove some barriers and inefficiencies in cross-border trading, but also use a token system to reduce FX exposure. A lot of the people who use those platforms, they're not even really thinking of those as cryptocurrency or blockchain products. They're just thinking that this is a much easier way for me to source goods overseas, and that's actually kind of an end state that I think we'd all probably want to get to. That kind of product draws a lot of attention from a more traditional player in the space like a bank, for example. We're seeing significantly greater bank interest in the US in more sophisticated uses of crypto. But the one thing I would say about that is that the regulatory burden in the United States for cryptocurrency remains quite significant. And so there are still problematic barriers from a regulatory perspective, and that means, regulatory barrier just means cost barrier, right? Regulation is expense in a lot of ways. That remains an issue for new crypto activity in the United States. This is probably what I've found the most interesting since I've been here in Hong Kong, because I think what I've heard is that this is going on here as well, which is blockchain's great, right? We all think blockchain's awesome. It's really cool. It's going to change the world. Is it actually the right solution for your business? Is it actually, do you actually need it? Do you need something more than a database, right? That's the conversation we're seeing happen in the United States now, and much more thoughtful consideration of whether or not this is the right solution for, what it's being proposed for. Is it really the best way to do that? That means I think activity and investment's been a little bit calmer, but very significant players across sort of the commercial spectrum in the United States are looking at blockchain in a serious and extremely thoughtful way. Something that doesn't maybe result in a ton of immediate investment activity in 2019, but in the long term suggests that this has moved I say the silly season has ended, right? And now is the time when people are really thinking about what's the real commercial use, does it make sense? If it makes sense, they will commit to it. If it doesn't, they're gonna walk away from it and do something else. All right, so I had done this presentation and I was like, this is what's gonna happen in 19, and I am totally prepared to talk to these people about that because I totally have a handle on what's happening here. And then this happened. Right before I came out to Hong Kong last week, it was announced publicly in the United States that Fiserv, which is probably the US's largest institutional fintech company, would acquire First Data Corporation, which is the United States' largest operator of processing technology. This is a massive, massive, massive merger with very dramatic impacts for fintech in the United States. First Data processes 3,000 transactions a second. They are in 6 million physical stores. They're in 100 countries. They are here. When you swipe a credit card or dip a credit card here, there are very, very high odds that First Data is processing that transaction. And Fiserv is the leading provider of processing technology for banks. So when you get your statement from your bank and it shows your transactions, very decent odds, if you're in the United States at least, that Fiserv is the company that managed that kind of statementing activity on behalf of your bank's connection into the wire networks, your bank's connection into ACH networks, the technology that powers your bank's mobile app. Fiserv does all of that. They also both own debit card and ATM networks, which in the United States are used to power a lot of emerging payments technology. So it's a very, very, very significant combination. What does that mean? We're not sure what it means. That may be great for innovation. They have both been historically acquisitive companies. They have bought a ton of people in the US, bought a lot of fintechs, small fintechs, and brought them up into the world. Or it may create a fintech behemoth that's very difficult to compete with. And the jury's gonna be out on that probably for this year and for next. I'm down to my last 2.5 minutes. And I'm pretty impressed that I've managed to get through all of my slides. So let's talk about kind of final takeaways here. If you are sitting here and you're thinking, my company's doing really well, having a ton of success here, I've got a really cool fintech innovation, I should take this thing to the US where they are hopelessly behind and a lot of the things that we here in Hong Kong do well. You should definitely do that. We could use it. I would really like to be able to do some of the things that you guys can do here. When I'm walking around trying to buy stuff in my hometown. But here's what you need to think about. First of all, compliance matters massively. The compliance burden is very high in the United States. If your solution is not built to be US compliant, reverse engineering it to make it US compliant is going to cost a lot of money and it's going to take a long time. That is particularly the case if you are interested in a cryptocurrency solution where we have, for reasons that are way too complicated to explain in the 1 minute and 30 seconds I have remaining, a very high licensing threshold. Your business case really matters. So let's be honest, your business case should always have mattered, right? We all know that's supposed to be thing number one. Is this actually a good business? But in a lot of fintech in the last couple of years, there's been a lot of froth, right? If you're coming to the US and you're asking an institutional player to put money in your company, to sign a deal with you, to partner with you, to give their customer list to you, you need to very solidly be able to explain why what you want to do is worth it. Because people are much more demanding now about understanding what's in it for them, what's in it for their customers. I was talking to someone the other day who was like, I have a great solution for disrupting point of sale purchasing. Merchants will not have to pay fees to take payment cards anymore, and banks are going to do this thing for me. And I'm like, that's great, but the banks aren't going to do that thing for you, because if the merchants don't pay fees for credit cards, the bank doesn't get paid, right? People are pushing a lot harder on why this works, what's the business case, why does it matter, why is it worth it? You need to be able to answer those questions. And the final thing is, the US is an institutional player market. Big companies, very big companies, the largest tech companies, the largest financial services companies, they're all interested in the spaces that you're in. And if they're not hiring you, it might be because they're trying to build something themselves. So be aware of that, think about that, and make sure you know who the competition is if you're interested in coming to the United States, because it's not just the people who are sitting next to you out here, it's the giant bank behind the table. And now I've got a giant flashing red light that says I should stop talking. So that's it. I'm around. If you have any questions you want to talk afterwards, after I talk again, feel free to grab me and we'll chat. Thanks.